Joining me now, Paul Grewal, Chief Legal Officer of Coinbase. Paul, great to see you in person. Thanks for being here.
Great to see you. Thanks for having me, Kate.
Let's start with the latest from the SEC on custody. Some changes here follow some other enforcement actions we've seen on other things like staking and stablecoins. What is the effect on Coinbase from the SEC's latest move here?
Well, we understand that the SEC is considering a new rule that would severely restrict the ability of state-chartered institutions to serve as qualified custodians for digital assets. It's important, Kate, to understand that custodial services are very important in the world of digital assets and crypto because, of course, the assets need to be secured and protected on behalf of customers at all times. Up until this point, state-chartered institutions have served as an effective way for digital assets to be protected, to be secured and protected in that way. And we think that the current system, while not perfect, has worked reasonably well. Unfortunately, it's our understanding that the SEC may wish to restrict the ability of states to charter institutions that are involved in this particular service, and we think that would be a huge mistake.
And custody meaning the ability to hold somebody's cryptocurrency.
Yeah, exactly. With cryptocurrencies or digital assets, the assets actually need to be held and protected and secured by some entity or some organization. And what we are expecting tomorrow are rules which would, for the first time, limit state-chartered institutions from serving as qualified custodians.
And that's the way it's worked until now. So the states have really been the one issuing these charters, allowing companies like Coinbase to hold cryptocurrency on behalf of institutional investors, for example.
Yeah, exactly. States and federal regulators have, in partnership, overseen these institutions. And it's been a process that has not been perfect, but has generally worked well, again, to keep customer assets safe and to make sure that there's appropriate oversight. What
is the fear in the SEC's mind? Why would they want to change the status quo?
Can't say for sure. Again, if you look at the history of state-chartered institutions, they have served as effective custodians, certainly in the history of digital assets or cryptocurrencies. We think that there's an important issue here about federal versus state oversight and the ability of states like New York and others to do what they have always done, which is to make sure that the institutions operating in their business in their jurisdictions are working effectively.
Does this essentially get rid of Coinbase's ability to store cryptocurrency on behalf of certain investors?
Well, there's a long process ahead if the SEC chooses to pursue formal rulemaking. There will be an opportunity for industry participants like Coinbase and others to comment, to provide their own input. Other stakeholders are going to have their say. So this is potentially many, many months out into the future. But we think it's very important to establish up front that the state system has worked effectively. And we think the history of customer assets being safe and protected demonstrates that.
Do you feel like there's any sort of tension between the state level regulation and what's going on at a federal level right now?
Well, I think at both the state and the federal level, there are lots of hard questions being asked. But digital assets, cryptocurrencies, sit in a very interesting place where there is both state and federal oversight in parallel. Mm-hmm. The notion that this industry, for example, is not regulated or lightly regulated, I think is belied by the fact that we have both state oversight, in our case, New York, the Department of Financial Services, as well as federal oversight at the Treasury, at the CFTC, and potentially at the SEC. So there is, I think, a complicated approach that we've adopted in this country. But questions like the custody rules really do require input from all the different actors. That's why rulemaking is so important.
What is the financial impact to Coinbase if, for some reason, custody were off the table, you were not able to operate the way you are now, and really would need to shut down that side of the business?
Well, Coinbase, of course, has a very diversified business, not only across many different products and services beyond custody, but internationally as well. And so for us, the main issue really is about proper process and proper respect for different regulators in this complicated system. I will say that I am pleased to see, if our understanding is correct, that the SEC is choosing formal rulemaking as the process by which these new standards may be adopted. It shows that the Commission, at least in certain instances, can use rulemaking to get to the right result. Elsewhere, we have seen a reliance upon a much more enforcement-focused, a regulation by enforcement approach that we think is much less productive.
So we also had some enforcement actions from the SEC earlier this week when it came to Kraken. How is Coinbase's staking offering different from what Kraken offers?
So Coinbase offers a very different type of staking service. Among those differences are, for example, that with Coinbase's staking service, the customer's assets always remain the customer's assets. title never passes to Coinbase, it never passes to anybody else throughout the entire flow. And so as a result, there's no worry that somehow customers are losing title or losing ownership as a result of participating in the process. Another important difference is that with Coinbase's staking service, customers understand clearly what rewards they're going to enjoy as a result of participating in the staking process. And the reason for that is the network protocol, the networks themselves, through basically math, establish what rewards will be issued. And at the same time, Coinbase is very clear and transparent that the commission that it charges, that we charge, is available to the customer. It's disclosed on our help center. And so customers have no worry that somehow Coinbase, in its discretion, is going to withhold those services or arbitrarily decide what rewards they're entitled to.
And so as far as the yield, that was one thing that the SEC talked about, the ability for customers to get up to 20% yield, like 21% yield with Kraken. Is it down to semantics and sort of the advertising around what this product was?
Well, the advertising and the marketing does matter, and so we think it is important that companies like Coinbase, as well as others, be very clear about how the rewards are calculated by the networks, what commissions are charged, and making sure that those commissions are disclosed in a place like the Help Center. So yeah, the messaging does matter. I think that some of the outsized numbers that some of these other companies and products and services provide probably attracted a fair amount of attention. But regardless of what the amounts are awarded to customers, we think it's very important to be very clear and transparent about how those amounts are calculated. And that's what we do.
And you've argued that this product is not a security.
It's not. It's not a security in any way, shape, or form.
Based on the Howie test?
Yeah, so the Howie test is one way that lawyers like me wrestle with the question of whether a particular digital asset is a security or not. The fundamental reason why a staking service like ours is not a security is that what we are ultimately providing, Kate, is a service. We are a service provider. Individuals are free to stake their own assets in their own way if they have the technical means to do so and the time. If they would prefer to use a service provider to allow them to do that, we make that service available. But the amounts and rewards that are available, minus our commissions, are the same using Coinbase as if the customers were to do it themselves. And so there's no managerial role for a company like Coinbase in the process in a way that the Howie test and other standards for securities requires.
So if it's not a security, what is this thing?
Yeah, so this is a product or service like any other. And it's important to understand that the reason why we have staking is that certain networks don't want to use proof of work, the alternative way to validate transactions. They want to do so in a more environmentally friendly way. They want to do so in a more open way that allows regular individuals, regular customers to pledge their assets and be part of the process of securing the network. We think those differences matter. And at the same time, we think it's important that more people be invited and involved in the process, which is what we try to do with our staking service.
We'll go back to the SEC in a second, but I wonder what that means to some of these networks like Ethereum that have switched to this proof of stake model. It's quite dependent on what you're describing here, staking. What's the outcome if exchanges like Kraken, Coinbase potentially couldn't facilitate that for customers?
Well, it's important to understand that, at least to my knowledge, Ethereum and other networks would continue to be secured by staking. The question is simply who can participate in it, and would they, as a result of that, be drawn into the federal securities laws or not? The fact of the matter is staking does offer a more environmentally friendly approach to securing these networks, and it is a way of allowing broader participation by members of the public. And so anything which, in a misguided fashion, suggests that staking itself creates a risk under the securities laws discourages this alternative way for validating transactions and discourages participation in crypto.
Gary Gensler was on our air talking about this and really does see it as what he described as a security. He told Andrew Ross Sorkin in the context of Kraken knew how to register, others know how to register. It's just a form on our website. They can come in, talk to our talented people and disclosure review teams. And if they want to offer staking, we're neutral. Come in, register, because investors need that disclosure. He also said they know how to do this, they're just choosing not to do it. Has that been your experience with the SEC?
Well, we certainly know how to register in that Coinbase, as a publicly listed company, had to complete a very onerous, extremely expensive S1 in order to become public back in April of 2021. The fact of the matter is that for individual projects that are just getting off the ground, people who are starting a new type of digital asset or a new type of cryptographic service, the burdens and costs associated with registering go far beyond just going to the website and printing off a form. And I suspect the chair knows this. The reality is that you have to bring in lots of lawyers, lots of accountants, lots of financial advisors, potentially spend millions and millions of dollars when you're at the very early stages of your growth, where you may be self-funding this or receiving your first rounds of funding. That's a huge burden and expense that ultimately costs not just the projects, but their customers, who no longer will have access to those services because of that expense.
One of the criticisms on the industry has been that the SEC has been very clear about this and said that everything essentially is a security. You've got to register, even if it's going to cost you millions of dollars, that the industry in this case might just not like the rules of the road. What's your response to that pushback?
Well, we want rules of the road, and that's one of the reasons why back in July of last year, Coinbase filed a formal petition for rulemaking in which we laid out 50 or more questions that we think need to be answered in order for there to be appropriate guidelines, appropriate standards and requirements. We're not going to like all of them. We may like others, but the point is there should be a public process for defining the rules of the road for crypto, whether it's staking, whether it's stable coins, whether it's other products and services that the SEC wishes to oversee. A regulation by enforcement approach that looks to private actions that involves no public participation is a far less effective way to do that.
But do they need new rules? It sounds like cryptocurrency advocates, Coinbase included, would say that. Why can't crypto fit into the existing securities laws?
Well, I'll give you a couple of examples. Okay, so for example, I mentioned that unlike a company that is ready to go public that can afford to hire all sorts of lawyers and accountants and others, many of these projects are much smaller, much more nascent, and frankly, many of them won't survive. And so the expense and burden really is much more material to those types of entities. There's also just the fact that crypto works differently than a lot of traditional assets. So the disclosures one might require of the entity issuing a particular digital asset should reflect the fact that a lot of information when it comes to blockchain-based technologies is publicly available, and so doesn't require or need a lot of updating and expensive amendments to formal documentation in the way that is required for other assets. The other thing is that these projects also are in many cases distributed geographically, in many instances distributed all around the world. So there needs to be an accommodation for some of the unique features of blockchain that make registration and full disclosures impossible in some cases under the existing rules. Now, new rules would be great. We want new rules. We want to bring everybody into the system who ought to be in the system. But right now what we have is a regulation by enforcement approach that gives no clarity or guidance to anyone whatsoever.
What about any sort of exemption? So if Coinbase or one of these startups, hypothetical crypto startups we're talking about, goes to the SEC and says, hey, we want to talk to you. This is not a security in our mind, but we don't want to register, but we'd like your feedback. Is that something you've seen work out, and have they given any sort of exemptions or guidance for individual companies?
We haven't seen that work out. Over a year ago, Coinbase had a very public experience in attempting to get clarity and guidance around one of its products, and in exchange for our effort to reach out proactively to say, we don't think we fall within the scope of the rules, but if you have feedback for us that suggests otherwise, we'd like to hear it. The response was silence on the one hand and a Wells notice threatening to sue us on the other. And so in our particular experience, that has not been terribly effective. But it's not just about Coinbase. We've seen across the entire digital asset industry, lots of organizations attempt to engage proactively and productively with the commission to understand what the standards are and what the rules are in the absence of formal rulemaking, and the response has been similar.
But as you said, so Coinbase went public, went through a rigorous process of putting out an S1. Are you surprised at some of the pushback based on the public disclosures and your process of going public and making all of this available ahead of time?
We are surprised. If you go back to our S1, and I encourage anyone to read it who is interested in Coinbase, you'll see that we talked about our staking services. We talked about our digital asset listing process, the process by which we review new tokens for listing on the Coinbase exchange. All of this was disclosed not just to the SEC, but to the world. And so it is a little disappointing, to put it gently, that now years after the fact, we find ourselves questioned for the very products and services that we were very clear about in our original S1.
Why now? Do you think some of these agencies feel burned by what happened with FTX, for example?
Well, I have no doubt that FTX has dramatically impacted how a lot of regulators are thinking about the digital asset space. And to be clear, it should. That was an obvious fraud perpetrated on the market, and we think that it should result in more careful examination of these issues. The question, though, isn't whether to examine whether or not staking ought to work in a certain way or whether stablecoins ought to be issued under certain circumstances. The question is, what's the right way to get to the right answer or result? And we think a public rulemaking process is far better than one-off enforcement actions that give no clarity or guidance to the market.
Is this a way to essentially ban cryptocurrencies if they're all considered securities and companies are being prohibited from offering some of these staking services, potentially custody? Is this a world in which you could see an effective ban, even if it's not labeled that way?
Well, I think the purpose may be to severely restrict or even outright ban crypto. But I think that it's important to understand that the American public and investors and consumers have made it clear that they want to be part of the digital asset economy. Something like 1 in 5 Americans, for example, have used digital assets or cryptocurrencies already, and we're just in the earliest days of this. And so Americans are going to access digital assets and crypto one way or the other. The question is, will they be able to do it here in the United States in a safe, protected, regulated way, as we are encouraging? Or are we going to push this activity and this industry and innovation offshore to places where the standards may not be as robust?
What is the effect of some of this going offshores?
Well, it certainly will have a profound impact on the American economy and innovation. And it's somewhat ironic, Kate, that recently we have been talking a lot in this country about all the innovation technology of the past several decades that we've lost. Semiconductors being a great example, right? And efforts that we now are taking and billions that we are now spending to bring some of that industry back. At the same time as we're making those efforts, we're pushing off the next wave of innovation by saying to project organizers and exchanges that this is not a friendly place to do business. And we're going to fight for the American consumer and investor. We are an American company. We want to be here in the United States. But we can't help but observe that in places like the UK, all across Asia, really all around the world, other governments are taking a much more practical, productive approach.
What would a fight look like from Coinbase? Are you willing to sue the agency or other government agencies at this point?
Well, no one ever wants to get into a public lawsuit with the United States government. At least I don't. But at the same time, I think it's important that the rule of law means something. In Coinbase's case, we have certain products and services, for example, staking that you mentioned earlier, that are only like 3 or maybe just under 4% of our net revenue, give or take, and yet, matter to the industry, matter to the future of crypto. And so because our products and services simply don't qualify as securities, we will fight if required. But we think there's still a chance for the SEC to do the right thing, to pull back. It's not too late to issue rules, to invite public comment, and to get the standards and the trade-offs right. We think there's still a chance that might happen.
Can Coinbase afford to get into something that Ripple, for example, has been fighting? They are now in an almost 3-year lawsuit with the SEC over XRP. Is that something Coinbase can handle going forward? Is that something the company is willing to take on?
Well, I think the question is, can Coinbase afford not to get involved in that fight? Because the fact of the matter is, yes, we could pick and choose certain battles that may or may not be in our direct interest, but digital assets, crypto as a whole, is clearly facing a serious challenge. And if we don't stand up for the rule of law and the application of standards set by Congress to these questions, it's not clear to me who will.
Coinbase, as you mentioned, American company based in the U.S. Is there ever a chance that you would look at expanding and maybe moving the headquarters if this were not a friendly and workable regulatory environment? Well,
as we've been very explicit about since our life as a public company, we are not a headquarter company at all, although we are based here in the United States. But look, we want to see innovation thrive here in the U.S. as much as anywhere else. And so that's why, rather than picking up our marbles and going elsewhere, we are committed to the public conversation and yes, in some instances, public litigation around some of these topics. But we cannot ignore that if we look around the world, other governments are saying, let's get the regulation right. Let's create a workable solution to some of these issues. Let's create sandboxes and other experimental ways of adapting to new technologies and services. Let's have a conversation. And at some point, America is going to have to decide for itself, does it want to have that kind of practical approach, or does it want to simply just outright ban or threaten an entire industry because it can?
You mentioned staking is about 3% of revenue. Going forward, it seems like a big picture. There's been talk about Coinbase diversifying, moving into some of these new technologies and new revenue streams. What should investors think about when they're looking at Coinbase as a company and the threat to what this might mean for revenue going forward?
Well, look, the long-term opportunity in digital assets and crypto remains very, very strong. And that's one of the reasons why we take these short-term challenges so seriously. There is so much innovation happening right now, Kate, in digital assets and crypto. So much capital, so much incredible talent that is not only staying in crypto, but coming to crypto. The future remains very bright. But whether it's staking, whether it's stable coins, whether it's securities definitions, these short-term fights matter because unless we get the rules right, unless we strike the right balance, we're going to see this innovation flourish in places outside the United States, and we think that would be a huge mistake.
On the custody side, is there a chance that this moves digital assets more into the arena of the banks, if they're the ones who are able and registered to custody anything really, crypto included? Could that threaten Coinbase and the rest of this growing industry if it really moves into the territory of traditional finance?
Well, we think traditional finance actually has an important voice in this conversation because, of course, there are federally chartered banks and others that might still qualify under a new standard from the SEC, but there are also many state chartered institutions that would suddenly find themselves on the outside looking in the way that Coinbase and others might face at some point. We think there's actually a broader conversation here to have, not so much about traditional finance versus digital asset or crypto firms, but about the rule of law and why a process that has worked reasonably well involving joint oversight by both the federal and state governments shouldn't continue. I think states like New York will have something to say about that. I certainly hope that they do.
I want to ask you about stablecoins as well. That's been another area that the SEC has taken on this week with Paxos, issuing some new restrictions around stablecoins that had to do with Binance. Circle is tightly involved with the USDC and another stablecoin project. Is that something you're worried about in terms of oversight and restrictions from the SEC at this point?
Well, we're always worried about overreach, and coming back to the definition of a security and the jurisdiction of a commission that is, by its very name, supposed to be focused on securities. I think there are serious questions about whether stablecoins even qualify. What I can say, though, is that at the state level, where these issues have traditionally been overseen, it's entirely appropriate for New York or any other state to ask hard questions about the diligence and the monitoring that any company or organization operating in its jurisdiction is following. So we're very confident that our own products and services meet or exceed those standards. And frankly, we're pleased to see that New York and other states are taking these responsibilities seriously. It's important, though, that the right regulator apply the right standard to the right product, and this not just be a free-for-all for any agency that's looking to expand its jurisdiction.
Has this issue become partisan? Hester Pierce put out a dissenting opinion on this, calling it paternalistic, lazy on the side of regulators, and talked about the enforcement, rule-making by enforcement, essentially. Any sense that this is a bipartisan issue, or that there's different sides of the aisle who are thinking differently on this?
I actually think it's been remarkably encouraging at how bipartisan this issue has been in Washington in particular. If you look, for example, to major legislation that's been proposed in the past year, you've seen Democrats and Republicans step up and recognize this is a legitimate and important asset class. Yes, there are abuses that need to be addressed, but we need reasonable rules. That's why, for example, Senator Gillibrand joined Senator Lummis in proposing new legislation. That's why we're seeing Democrats and Republicans on the House Financial Services Committee and on Senate Banking taking a deep interest in this issue. So, ironically enough, crypto may be one of the few issues to bring Washington together. We'd be pleased if that were the case, but we're at the very least pleased that at this point in time, we think the issues that are important to our industry are issues that are important to both Republicans and Democrats. How
is it going so far in D.C.? Your CEO, Brian Armstrong, is there right now. Talked about kind of setting up a snack bar because he had a meeting.
I think he's finally made his way out of the snack bar.
He's out of the snack bar. How is it going so far in terms of conversations this week and after some of these SEC actions? I wonder if you can give us any color on the feedback from lawmakers.
Yeah, so lawmakers are asking hard questions. They're asking questions about whether or not the rules that are being applied to crypto are rules that are being made in a transparent, public, and open way. We're seeing lawmakers ask, I think, serious questions about a campaign by the SEC in particular that seems to be focused much more on regulation by enforcement than public rulemaking. And at the same time, I think lawmakers are drawing distinctions that they maybe weren't capable or willing to draw even a year ago between actors willing to play by the rules, eager to play by the rules, and those that are not. And so all of that is very encouraging.
Are you worried at all about poking the bear in some sense when it comes to the SEC, tweeting about it, coming out publicly and saying you're willing to sue the agency and potentially drawing more attention and more scrutiny to Coinbase?
Well, we're not looking to poke the SEC or any other agency, and I would much rather have, frankly, conversations that are part of a formal process that involve submitting white papers that only lawyers and other advisors are going to read, but that are focused on substance and merit. But unfortunately, in certain situations, we've faced regulators who are very eager to make a public display of their regulation by enforcement campaign and even create short clip videos and other content that seems to want to take the conversation beyond a productive dialogue and make it much more about a fight. We don't want to fight. We're prepared to fight if we have to. We think there's a better way, which is why we've petitioned for rulemaking now going on 7 or 8 months.
What's the ideal outcome for Coinbase? If going forward, lawmakers followed exactly what you were prescribing, I know you've talked about wanting some formal rulemaking. Could you outline exactly really what you're asking for?
Yeah, what we'd love to see are sensible rules that address, for example, under what circumstances does one agency versus another have jurisdiction over an issue? That's been a constant source of tension between the SEC and the CFTC, for example, in a way that we don't think has always been productive. We'd love to see sensible standards for disclosures so that if Coinbase, for example, is holding itself to a high standard on how its assets are protected, whether the customer in fact does have title to the assets, as is the case with Coinbase, that same standard is being applied across the industry. And we think that the most important outcome of legislation or rulemaking is a recognition that the right way to strike the right balance here is through a process that invites participation and not immediately throws parties into a very hostile adversarial posture. And
worst case scenario, if none of this happens, is it an effective ban on this industry?
Well, we think the industry's future is very bright, and crypto and digital assets is going to proceed and move forward. We think things will evolve more quickly and in a more protective manner for consumers and investors if there are rules, which is why we've been so public, even to the point of tweeting and making public comments, that rulemaking is the right way to go here.
Got it, Paul. We'll end it there. Thank you so much for being here in studio. Great to see you.
Great to see you as well.